Hello, Kasia. It's great to see you. Great to have you here. It's another episode on the blog that we do together, and it's awesome that you are here with me in our studio.
Hello. Good evening.
Great to have you here. Instead of listing all your amazing accomplishments and leadership accomplishments, I would like to ask you to tell us and our viewers a bit about yourself and what you are working on lately.
My name is Kasia Losotah-Heller. I am founder and managing partner of Lexcelence, law firm based in Switzerland, in Zug, focused on commercial law, obviously capital market law, banking law, and let's call it crypto finance. Beside them, I am a co-chair of regulatory working group of Crypto Valley Association, as one of the major association, global association dealing with issues, be it business, be it legal, be it sustainability around new and modern technology. I teach at universities, and we are recently busy in Switzerland mostly with new law on crypto assets, let's put it like this, bringing Switzerland closer to European Union. And obviously, last days keep all of us busy in relation to the anticipated Clarity Act in the USA.
As always, impressive. And yes, just like you said, we are here today to talk more about the USA market and USA regulations. And for today, I have some prompts. So first, we will be talking about the Clarity Act. With this one, if you could tell in a few words, what is it? What's the Clarity Act about?
Well, obviously, the Clarity Act, taking into account very pragmatic names used within US legislators like Genius Act. And then we have now Clarity Act. The aim is to bring clarity in relation to tokens. And obviously the first legislation was Genius Act, which is only dealing with payments token. This is very important differentiation, payment tokens only. But we all know that we have different tokens on the market, right? So we have tokens which might be financial asset. And then we have in the US SEC, in other countries, it might be different regulators, but those ones are treated basically as securities. And then we have other tokens which represents value, which function on the blockchain network. And the issue is that we sometimes don't know what they are. So the Clarity Act aims to clarify the situation of tokens which are not security or may have been securities at the beginning when there was a promise to issue them. But the issue here, the aim is to clarify the situation of such tokens, and the ultimate goal is to have something what we call digital commodity. So simply to clarify the situation, what shall an issuer do? What shall an instructor do? Let's say exchange. If the tokens are traded on such exchange, shall they run to SEC, ask for license, ask for registration and requirements, and basically maybe some exemptions, or shall they go to a different authority and basically start with them? So that's the main goal behind the act.
What actually will change when the act is passed? Because it's not passed yet, yeah?
Not yet. And I think on the day when the act will be passed, probably nothing will change, just at the beginning, because we will have additional time for, let's have some technical standards in place, regulatory standards in place. But what will happen, the approach will change. What is happening now in the US and also very similar in Switzerland, we have legislation or regulations by enforcement, meaning there are some general definitions which says if a token is a security, then we need to apply regulations around the securities. If a token is not security, then not such regulation. And then there is the third question, very open question. So if not security and not whatever token, then what? And basically, it will change because we will have now digital commodity definition, and the Clarity Act will apply to digital commodities. Not to securities anymore, but digital commodities, meaning there will be different regulator in relation to securities, we still have Security Exchange Commission. We still will have those two regimes. One is SEC, Securities Exchange Commission, and the other one is CFTC. And it will stay, but we will have two authorities regulating two different areas. And this will be the main difference. So in relation to digital communities, we will have a known set of rules, basically. So the traders and exchanges will exactly know if their token, let's say Ripple or Bitcoin itself, will be treated as digital commodity. They will know what exactly they have to do. And not like it is today that we will have different regimes which have to be decided by the court, and the court, even the same court, might decide in two opposite directions. Let's take the Ripple case, when the federal court in the US said, okay, Ripple is actually not a security and might be treated as digital commodity. Let's put it very generally. And then we have this Terraform case when it was exactly opposite interpretation by the court. So such situation is obviously not very beneficial to the stakeholders on the market. And this is why we needed to have some clarity. And this is how the act is basically called. It's Clarity Act. So this will change. We will have different regimes in relation to digital commodities, and different regime will apply to something what I call digital securities, which they still be.
As they are, yeah. And you mentioned two another topics that we already have. So this is the sixth, is the SEC. That will be one of those elements. So a Securities and Exchange Commission, and it will be responsible for the digital assets. Yes,
this one will be responsible for digital assets, which turn out in the end to be securities. So something what is similar to shares, to derivatives, to futures, to bonds, everything where we have investment contract behind it.
Exactly. And we have CFTC, which is Commodity Futures Trading Commission, and this one will be responsible for
the new digital commodities under Clarity Act provided. And this is what is then basically the whole issue about clarity, that there's some missing clarity, that they really all digital commodities are not securities.
Exactly. And talking about those, do you really feel like the Clarity Act will be the end of that problem? Which jurisdiction should the company go?
In very clear cases, let's take bit spot trading on the table. Yes, we will know exactly what is digital commodity. But there might be cases where, again, there will be some unclarity around which law, which regime to apply. And the most visible example is something what we called digital commodity pool, when we have, let's say, fund, which is trading or buying for many investors, Bitcoins, Ethers, Solana, and basically trading with them on spot. And it's not buying futures, not buying other swaps, no derivatives. And in such case, there still will be some problems around which law to apply. Because on one hand, we have here spot trading, which usually does not require any sophisticated regulations. But when we were having digital commodity pot, where with those commodities might be certain futures or swaps connected, that in such case we can again go back to this regime, which is basically covered by authority of SEC.
Yeah, so it won't be that easy, but it will be more clear, at least a bit.
In my personal opinion, this is actually not very bad step to have the clarity. Obviously, the devil always wears Prada, as we know, but lies also in details. So depends how the authority will execute, who will be running those authorities. Will this be politically affected or not? To have more clarity on the market is always a good decision, but the question behind it is how it will be then enforced.
You're right. And there is one more very challenging topic that's covered through the Clarity Act, and it's about the yield. Yes, and if it can be used, it can be put upon any digital assets, etc. What's the issue there?
The yield, which is called very conveniently in something what we called crypto finance, is actually, I don't want to call it a replacement, but it's the same factor when we have in traditional finance, like paying interest. So obviously, if we have public deposits put in a bank, then the bank, in exchange of holding this money, may pay us some interest. And this was always basically the main restricted area of banks, taking money and promising pay them back with some more money, usually called interest. In the crypto finance, the yield or the income, the earnings around it, they are generated in different ways. But at the end, when we giving somebody our tokens for a custody or holding them, I'm not even talking about investing them, but just giving them, and the provider promise us to pay us something back, it's very similar to the mechanism of interest. And obviously, if this is activity which is restricted to the banks, then the banks not very happy that the others will have the same rights without being licensed as a bank. And it's not only about that the bank does, that the banks don't want to share their business. It's rather about how much capital requirements and different requirements the bank needs to meet in order to keep their license and to stay a bank, basically.
And with banks also, they need to have some liquidity, etc., and reserves to be very secure. Yes, it's also a bit about customer security or client security when they are putting their assets, and expect something in return, but also they want to be sure that the assets are there, that there is something to get
and
back.
They need to have, basically they need to sit on a pile of money, and they cannot do anything with the money because they need to have them ready and they need to pay those interests. So one thing is there are different regimes. This is why the yield is always an issue. Like under Genius Act, also no interest might be paid based on holding of stable coins. Similarly here, also no yield shall be paid, and especially not in occasions where somebody is only holding without doing anything with the assets, but just simply holding them, let's say, to to cause some inflations on the market, basically. So if there's lower assets, then the price may go up, and they trying to convince the holder, let's give us to us, don't trade them, and we will pay you something back. And such situation is obviously not very welcome under Clarity Act.
Thank you for sharing that with us and for helping us understand what is going on in this area. And as usually, there is something about protecting customers, that the Clarity Act should also help market and consumers be more protected. Is it how you see it? Or it's more on the political level?
No. There are regulations in the Act which aim to protect customers, so-called private investors or retail investors or customers. Obviously, yes. The question again here is, because there might be many regulations and many obligations, at the end we need to see how they are executed. So is the provider really applying them? Basically, the majority of those pro-consumers, pro-private investors regulations, obligations which are included in Clarity Act are about transparency, about who owns the platform, who owns the infrastructure, who owns the certain asset, the token, who is the issuer, where it is located, basically. So it's a lot about information, basically. And this is, again, also something that we are missing today. Sometimes we look on the white papers and trying to find out who is issuing, where the platform is located. So that's basically the approach here is to inform and to make sure that the information provided are like really transparent.
Okay, so it should be better for the investors, easier for them to make to understand the product. Do you see any other market participants that will benefit from this act?
Generally, in majority of the cases, the traditional, let's say, providers will benefit. Obviously, investment funds will benefit. The big players will benefit. It's not only the small ones, investors, but majority of them will be the big traditional players, certainly investing in such business. Why this is like this? Because as you can see, the whole blockchain industry is, we have been talking about it for many years already, but we missed scaling up the business. And one of the reasons why we cannot scale is that there was no big investors' money. And the big investors did not invest because they also have certain regulations that they need to apply. They need to know what is the asset? Yes, is the asset legal? Is the asset is the investment committee agreeing to such investment? So the more clarity, the more tendency by the bigger player to invest. So obviously the provider the providers will benefit here. The big players will benefit here. The smaller the private investors, smaller investors, I think they will benefit if they correctly read what is written, that they will inform themselves, and they cannot simply assume, oh, somebody will provide me here protection, because it's still up to them. They really need to know what they're doing, and this is what Clarity Act giving them the opportunity. So they will benefit. Maybe who will not benefit too much, and we see it already on the market, is smaller players, DeFi system which are not known, we don't know where they are located, those which may not want to have any transparency anyway, be it under Clarity Act or without. They simply perhaps not interested in too much transparency.
Okay, yeah. So it's when it comes to, just like you said, DeFi or totally decentralized and anonymous networks, anonymous transactions, that it will be probably it will stay quite the same. Yes, it will be somewhere in the gray zone.
Yes, and again, I think when in the meantime they will suffer a little bit under lack of investment, because the bigger ones will not be allowed to invest. What will happen in the gray zone, we don't know. But with regulations, is always an issue. Yes, quite often we see situations on the market that some stuff is going on for years. Let's look on the last example, what is happening in Poland with the famous crypto exchange. And nothing is being done as long nobody was hurt, basically. And then the machine starts, right? So basically, and then the regulations are also put on the market. And if they are put on the market, then we have already certain market maturity. And when we look, I think the best example is GDPR, which put all of those obligations on a big companies and limited the rights, put certain obligations on them, but they had means to execute them and to imply them and apply them. But the smaller players obviously had a much higher barrier to enter the market. So it will be a bit similar situations, because as soon as we have financial market regulations, and you in SPO, you guys know it very well, the way how you need to provide the tools, how much security you need to provide, how many tests you need to run with your clients, it's costs.
Yeah, it's this additional barriers, additional security, additional even when we are talking about the transparency, yes, the AML that's everything brings another cost, but then it makes, well, those who can jump over that fence, just like you mentioned, are, you know, vetted and checked from each direction. Yeah, so that's, but just as you say, there will be some winners, there will be some losers in this new Clarity Act, but also if you could try to think about the long-term impact of this Clarity Act.
The long-term impact will be that, let's assume it will be passed in a form like it is. We definitely will have some more clarity on the market in relation to this digital commodities, and I think it will become a standard basically through the world, because what is happening now, US was lacking a little bit behind other jurisdictions, which then decided, okay, we want to regulate basically before something happened. We want to have the regulations. We want to have some more clarity on the market. Let's say MiCA in European Union, or Hong Kong or Singapore. And then in the US, we had this mantra of the Huawei tests. And is it investment contract? Is it not? Is it 2 oranges? Is it enough to be investment, or 2 tons of oranges? Sorry, I'm saying this because the original case was about orange trees and some profits around it. So it will put standards. Other countries will have to adjust as well. And that will be the long term. What will happen?
I assume that also it's not the end of the challenges. Yes, for the USA and for the regulation. Which aspects are outside of the Clarity Act?
No, the aspects which are outside of the Clarity Act is basically, by definition, everything related to securities. And then the challenge between commodities and securities will stay, because let's say we discussed yield here. What will happen when we'll have commodity which in somehow generates, I don't want to call it yield, but anything around earning? Then we will again go back to securities. So this unclear clarity will stay for some time, and I think it will taking into account how modern financials and the means of investment are developing. There will be new ideas which will obviously stay outside of the acts, and then we will see.
Yes, that's natural for any kind of innovation. Yeah, and when we are in the blockchain, we have new ideas how to use it, what to tokenize, etc. And well, it's always the something that, well, markets and regulators try to catch up to, but usually innovations are first. And if you would to give this will be my last question, some advice about the USA market for someone who wants to start the blockchain, the crypto business. Is it a good place to go there?
Firstly, wait and see, because we need to really have Genius fully enforced. We need to have Clarity, if at all, fully enforced. And I'm a lawyer myself, but I'm not biased if I say it. Lawyer up yourself before you go to the US market, because you really need to have the clarity. What kind of instrument are you offering? In what function are you offering? And only after this is clear, let's try and go and conquer the US market, basically.